In the equity quadrant, taking a look at another new high in the cash S&P. The cash S&P hit another all-time high today while the futures again lagged. Now, this divergence can be for a number of different reasons. For example, institutions could be nervous about structural longs and they're hedging with S&P futures by selling them as the stock or the cash goes higher, or it could be liquidity difference taking effect in the short term, since on a day-to-day basis, the futures tend to be more liquid than the ETFs. These new all-time highs have happened in the cash on a little bit lower volume. This could also be resolved as futures contracts roll and prices converge more regarding current prices versus old price action. And it certainly doesn't imply that the futures are in a different trend than the cash when you look at the run of 5 of the last 7 sessions in the futures market higher and with higher closes. Also, the S&P cash and the S&P futures were both the strongest of the indexes, at least as we sit right now with a little bit of time left in the session. The low today in the S&P futures, 61.2925, that was down 0.28%. The high 61.6650, that was up about 1/3 with a little bit of time left in the session. The March S&P futures still up about 1/4%. We also had the FOMC minutes today. Most participants in those minutes judged that the risk to the Fed's dual mandate objectives were roughly in balance. And I think that was a little bit less hawkish than markets may have expected. The dollar went a little bit lower. Yields basically barely moved. They moved a little bit closer to unchanged, but they were still down on the front end. And then when you look at the sector strength today, basic materials and real estate sectors are leading the market so far, with gains of about 2.3% and about 1.77% respectively. This kind of performance is supported by rising commodity prices and investors' interest in infrastructure, which comes with the overall idea of potentially stronger economic growth.